Live from the financial capital of the world, this is India Business Hour with Shireen Pan in New York.
Hello and welcome to the special edition of India Business Hour. I'm Shireen Pan and we're coming to you live from the New York Palace Hotel. This is where Finance Minister Arun Jaitley has just finished meeting a bunch of foreign institutional investors. Currently, right behind me, in fact, meeting with select FIIs. I'm being told people from DE Shaw, Soros Fund, BlackRock and others in conversation with the Finance Minister as we speak. It's been a busy 2 days. This is, of course, day 2. Yesterday, at a meeting that was organized by KKR, I'm given to understand that the Finance Minister met with James and Rupert Murdoch. He also met with Steve Kandarian of MetLife and a bunch of other global investors who are looking at opportunities in India. We'll get to all of that and more as we go along here on India Business Hour. I'm also joined by a special guest today, the Managing Director and Senior Global Economist at JP Morgan, Joe Lupton. Appreciate you joining us here on India Business Hour. I'm going to come back to you and chat in just a second, but over to Surbhi for the headline. Surbhi.
All right, Shireen, we're really looking forward to that conversation. But before we get to it, the headlines of the day. Let's quickly run you through the top stories.
This is nowhere close to our potential. And therefore, there's a growing restlessness in India. That restlessness extends to me and to most people in the government of India also.
On a roadshow to the U.S. investors, Finance Minister Arun Jaitley speaks exclusively to CNBC TV 18 from the New York Stock Exchange, promises faster reforms and says 8 to 9% growth rate is very much achievable.
I think the GDP numbers are complete nonsense, right? In terms of, I really feel that this is the most ridiculous thing that I've seen from any country.
I don't see any issue as far as the figures are concerned.
Morgan Stanley's Ruchir Sharma slams the GDP data revision, calls it ridiculous and the single biggest pitfall of the Modi government. The Finance Minister defends the data and says it's credible. The rally continues on the Lal Street as markets gain for the 5th straight day. The Nifty gains over 1% and the Sensex surges past the 27,000 mark. The rupee strengthens to a 2-week high against the dollar. Global markets shrug the tug-of-war between Greece and its investors thanks to some dovish commentary coming in from the U.S. Federal Reserve. Wall Street rallies over 1%. Finance Minister of Mauritius slams India's general anti-avoidance tax, says it will do no help for the government, also promises to crack down on round-tripping and says will submit a new protocol for the double taxation avoidance treaty between both nations. Major churn at Cipla. Over the last 3 to 4 months, many top and mid-management executives quit after CFO Rajesh Garg and India head Samir Goel left the company. That's another exclusive. Vedanta stands firm on the merger with Kane India after LIC asks the company to sweeten the deal, says no to higher premium and dividend. LIC's blessings are essential as it holds over 9% stake in Kane India. That's another exclusive this evening. Yes Bank is not at risk in the Kapoor versus Kapoor battle, says Cyril Schroff, lawyer to the bank. Also says both sides could appeal this order, even though he's hopeful that mediation will work. PSU banks throw a 60,000 crore rupee credit line to Prime Minister's renewable energy mission. SBI alone commits 20,000 crore rupees. Another exclusive this evening.
There's a growing restlessness in India. That restlessness extends to me and to most people in the government of India also. That we see that our optimum targets are now achievable.
There's a really sincere effort at tackling some things really head on, like the banking reform. Just capitalizing the banks for higher growth.
And whatever had to happen, according to me, needed to happen the first few months when the political capital was at its peak. Now the political capital is beginning to decay, and it's very difficult to get that done.
Well, there you're hearing some of the biggest voices when it comes to investing in India. New York is where the action is. But before I toss it back to Shireen, a quick check on the day's trading action. The bulls continue to march ahead on the Lal Street as markets gain for the 5th straight day. The Sensex gained nearly 300 points to shoot past the 27,000 mark. The Nifty also rallied over 1% as it now nears the 8,200 level. Mid-caps moved almost in tandem with blue chips as that index gained nearly 100 points. Well, that's equities. Now for a quick check on Mint Street. Back home here in India, the Indian currency has ended at a 2-week closing high today to close well below the 64 level. This after the FOMC's decision to hold on to key interest rates led to a sharp decline in the dollar overseas, and of course dollar demand at home here as well. Sustained dollar selling by banks and exporters in India also added to the sharp sell-off seen in the dollar. Well, that's the currency and equity action. But Shireen, you've got a lot going on. Of course, busy 24 hours for you already, I think, in the US of A.
Well, that is right. It's been a 25-hour day for us here at CNBC TV 18 in New York, tracking all the action. NYSE is where the finance minister made his first stop trying to hard sell the India story. And I think if I can pick up on the commentary that we're hearing from investors, while they believe in the strength of the India story in the long term, one of the criticisms that we're getting to hear is that, while people appreciate the BJP's decision-making style, they don't appreciate what they're now calling the UPA's bureaucratic style. So they're saying this is a government that has a quick speed of decision-making, but it's still saddled with decisions that take too long to actually be executed or implemented. And that is a criticism that the finance minister has had to deal with while conversing with investors. But listen in to what he had to tell me at the New York Stock Exchange after ringing the closing bell about the reform agenda going forward, and saying that it is now time for action to begin.
India further believes that where we moved up, even at a 7%, 7.5% growth rate, this is nowhere close to our potential. And therefore, there is a growing restlessness in India. That restlessness extends to me and to most people in the government of India also, that we see that our optimum targets are now achievable, which is to suggest that the optimum growth rate that we target, moving upwards of 8%, 9% in India, is achievable. And therefore, having embarked on a second phase of a reform program in the last 1 year, we are fairly determined to go ahead with that program. The results seem to be slowly coming in, and I think the best is yet to come. And therefore, that's what we believe. So I'm here really to, you're right, assure global investors that things are happening in India. But global investors are also very competent and very clever people. They analyze things for themselves. And they can also see where the challenges as far as India is concerned are, and the areas where India is likely to grow.
Okay. You spoke about restlessness within government to try and achieve the kind of growth targets that you've got. But there's also restlessness among foreign investors and domestic investors, and I'm sure they've shared some of those concerns with you, that things are not moving as fast as they ought to, that things haven't changed on the ground. I know that the government doesn't buy that argument, but if you were to give them a clear roadmap in terms of what are the priorities, in terms of specific reforms that you intend to carry out, what is it that you've told them? What is the message?
You see, first of all, let me contest the position that things are not moving on the ground. Things are moving on the ground. When your revenues in the last 2 months increased by 37% and 39%, and these are indirect taxation revenues, a very large part of which is attributable to growth in the manufacturing sector, now things are moving in the ground. Now, I think as far as the government's reform program is concerned, now is the time for action. As far as legislative reforms are concerned, we've done quite a few of them. The taxation reforms are on the ambit. I've already said that direct taxes are going to be brought down further. Yeah. From next year, you'll start seeing the impact. Indirect tax reforms, we are making the changes, which itself is capable of pushing up the economy.
It's no secret that the government would expect or would want interest rates to come down. I know it's a decision that the governor will take, but what is the North Bloc view?
In the last 6 months, between January and June, the central bank has cut rates thrice. I would have liked to see it more. Most Indians would have liked to see it more. That's a responsibility that the Reserve Bank has. Let's wait for the monsoon. At the moment, the monsoon situation looks somewhat better than what was being predicted earlier. And I'm quite sure, as a responsible institution, they will respond to the situation as it emerges.
Are you afraid that the volatility, and especially the sharp correction that we've seen in the Indian stock markets, is going to hurt your disinvestment plan?
I think the markets will stabilize. We have in the pipeline approved transactions worth almost 50,000 crores. And therefore, putting them in the pipeline and then going through it month by month or literally week by week should be possible.
When do you start to see the action pick up on the ground?
I can't tell you, I can't speculate because the markets are involved, but I can tell you we are in a state of readiness.
What about strategic sales, sir? Because we haven't seen forward movement.
You see, strategic sales, as I have said, I would be confining in the first instance to the areas which we have said. If loss-making units, there is an option. Hotels, there is an option. And if some other case comes up, we'll consider that option on a case-by-case basis.
Residual stake sale in companies like Hindustan Zinc and Balco. The companies are now looking at a merger and that has been given approval at least by the boards. What is the government's position?
I must tell you that even honest transactions, as in the case of hotels previously, as in the case of zinc earlier, stirred an unnecessary controversy. Now, I hope that controversy now comes to an end, with CBI also giving an indication that that was a perfectly honest transaction. The confidence of the civil service in spearheading those drives will certainly improve. We've already put in place adequate amendments to the Prevention of Corruption Act also, so that honest decision making doesn't attract provisions of that act. I think in areas like defense purchases, in areas like divestment, these two changes will certainly play a very significant part.
But specifically on the Hindustan Zinc issue, because as you said, the CBI is likely to close the investigation for the want of evidence.
I have only seen headlines in the media.
Sure.
And if that were to happen, I'm sure it will send a good indication and strengthen government's ability to take an appropriate decision.
We do have the next parliament session coming up. The law minister and you yourself have had meetings with farmers' unions. Is there any thought, consideration to review your position as far as the consent clause is concerned?
I must tell you that in my meetings with the farmers' organizations have been very positive.
But they said consent must be brought back.
Well, they've given me a written notice and their suggestion is contained in that notice. There is some flexibility, I read, in whatever is the written memorandum given to me.
Do you expect trouble in Parliament on account of the fracas involving Sushma Swaraj, and how much of a setback is this going to be for your government?
No, there is no setback at all. I've already clarified. She acted perfectly bona fide. And issues will come up, and certainly the government will be ready for any discussion on the subject.
Well, that was the Finance Minister in conversation with me at the New York Stock Exchange. As I mentioned just a short while ago, he has addressed about 100 plus investors, foreign institutional investors, about the India story. And I think the message going out from the Finance Minister, if I could encapsulate the 3 or 4 big takeaways, was that the government will continue to spend on infrastructure, that as far as the NREGS scheme is concerned, the government is looking at hiking the number of man-days to try and boost rural income and rural wages at this point in time, because that is a key cause for concern. The Finance Minister also said that the government is conscious of the fact that they are perhaps cutting it too fine in terms of the timeline for the goods and services tax is concerned, because April 1, 2016 does look ambitious unless and until the government can actually clear the constitutional amendment bill in the coming session of Parliament. 2016 is going to be very, very difficult. He also did say that they are mindful of being able to put together all the pieces as far as kick-starting the economy is concerned. A discussion paper on full capital account convertibility is expected by the end of the year. But, one of the big concerns is on India's authenticity of the GDP data. Remember, it has come in for severe criticism, but the Finance Minister saying that there is nothing about the data that is misleading. Listen in to his comments here.
Our taxation structures need to be streamlined. And in the last 1 year, we've laid down a clear roadmap. And I'll just indicate some important facets of that roadmap. Our direct tax structures, the corporate taxation is going to be brought down to 25%. That process begins next year. And every year, over a period of 4 years, from a 30% plus some surcharge, we bring it down to 25% to bring it almost globally competitive. The alternate investment trust models has already been put in place. And what is work in progress today is one of the most important indirect taxation reforms in India. This indirect taxation reforms is in terms of the goods and services tax, which will be a single tax structure across the country. I'm glad that most states in India have come on board and agreed to the proposal. The lower house has passed it. It's a constitutional amendment which has to be passed by both houses of parliament by a 2/3 majority. The lower house has passed it. Even though the principal opposition party wanted to somehow defer it by referring to a committee, I think the most significant part was almost every other political party, including the allies of the principal opposition parties, supported the bill.
Well, that is the Finance Minister speaking at the City Insight into India Investor Conference earlier this morning. Joining us now, of course, from JP Morgan, Joseph Lupton. Thanks very much for patiently waiting by. Let me start by asking you about the India story. As I was just pointing out that there's been some concern about the strength of the reform agenda that this government has managed to push ahead, the credibility of the GDP numbers. What do you make of the India story today?
I mean, I think it's positive. I think we've come a long way from, say, 2013, the taper tantrum. India was looking somewhat fragile and got hit fairly hard during that period. And since then, you've seen a new government come in with a lot of exciting new reform ideas. They've started to push some of these through. There's been a little bit of a concern that maybe the heavy lifting in terms of the real important reform pieces have yet to be implemented, as you were pointing out earlier. And I think there is some caution there, and to really kind of spark the type of growth that certainly the investor community is looking for, I think you want to see these things pushed through. So it's the land reform, it's the GST, it's some of the labor reforms. And to do this, I think you have to make some difficult choices, and I think you also need to provide some type of transition relief, particularly to the rural economy, where, as you pointed out, things are certainly struggling a little bit more than the urban economy. So there's a lot of things to juggle here, but some important steps are being taken, and I think that's a positive.
So what kind of growth estimates are you factoring in for India?
Certainly not the number we saw in the first quarter. But
you don't buy that number?
No, and I don't think it's a matter of kind of not trusting what the government is producing, but it's just more of a movement to what arguably is a better way of measuring the economy, and I think there's some bumps along the way. But first quarter definitely seemed a little too strong for us. I think overall we are looking for an economy that's kind of running in the kind of 7% range over the course of this year. That includes that very large first quarter number. But looking forward, I think we're fairly upbeat, and it's one of the economies in the emerging market block that we're seeing some of the strongest outperformance of. So definitely India is standing out here.
You talked about the taper tantrum that we had to withstand in 2013. What do you make of the commentary that's coming from Janet Yellen? Markets seem to react and see it more dovish. What could be the possible impact, whether it's September or December? The hike is coming. What could be the impact on emerging markets like India?
Well, I mean, first of all, that's right. And Chairwoman Yellen was quick to say that, look, don't get so hung up on the timing of the first hike. It is coming, and I think the issue that she wants to stress is that, likely sometime this year. We still look for 2 hikes starting in September, but it is a close call after yesterday's somewhat more dovish report, projections.
So would you now think December?
Again, we're leaning towards a September and a December hike. I think the odds, are shifting a little bit more to just a December. I wouldn't rule out an October move either, but either way, I think the point, as you pointed out, is that it's the pace of hikes. And there she keeps stressing this will be a gradual path. And in that respect, they did lower the path about 25 basis points in terms of the hikes through 2015, lowering the dots in 2016 as well. So they are going to be cautious here. That doesn't mean it's going to be uneventful for the emerging markets. And so I think there are still a lot of concerns out there. I think investor positioning was a big part of the 2013 shakedown. That is, we're not there. We don't have those types of positions. So we're a little less concerned. But just from a fundamental perspective, I think there are a lot of concerns across the emerging market block of how the fundamentals, after a long period of credit buildup in the aftermath of the financial crisis, how this is going to unwind. That is a big concern still.
So, there are concerns on how much liquidity we are going to see sloshing around in the system. In that context, then, within the emerging market basket, do you believe that India is best positioned today from a capital flows point of view?
Look, I think think they've made a lot of good progress. We talked a little bit about the reform agenda. I think the current account position has certainly been benefited by the fall in oil prices. Terms of trade have certainly improved a lot from where they were in 2013. So there's been a lot of positive developments. And so in terms of where India sits right now relative to the rest of the emerging market bloc, I think it's sitting better, certainly better than 2013.
What about global growth? Because we've seen both the IMF as well as the World Bank cut down forecasts as far as global growth is concerned. There are concerns on how much China is actually slowing down. Right. The concerns as far as global growth are concerned.
Yeah, so I mean, the year started out much softer than we would have thought, and it's partly the U.S., which was a big disappointment, yet another first quarter disappointment. There are issues around weather and some seasonal adjustment issues. India's not the only country that has some questionable Q1 GDP numbers. But I think, for the year as a whole, what we're seeing is a developed market that is going to be doing better, probably as a whole converging to something that's well above what we consider potential growth. We still are concerned, and we take a lot of signal from the weakness we are seeing across the emerging markets. India does stand out, but more broadly, we know China's downshifted. Russia's in a very deep recession. Brazil's in a deep recession. Turkey growth is kind of a little bit on the softer side. So, these are major players in the emerging market bloc, and I think for the region as a whole, we've been somewhat concerned that domestic demand through the first part of the year has been very weak, and the GDP numbers have really only been supported by a big net trade support from the developed markets. And that's probably going to unwind a little bit in the middle quarters of the year. And the question is whether there's a domestic demand engine that's going to come back to life in the EM. So there is, I think, some real legitimate concerns.
Speaking of concerns, how big a worry is Greece? July 1 is looming large, the possibility of a Brexit. But do you believe that the world is better prepared to cope with that?
Certainly better prepared. I think the institutions that exist in the euro area now just were non-existent, a few years ago. So those are important. The kind of the OMT, the ESM that exists in terms of the regional players there. There's a lot of firewalls in place. Also, the exposures to Greece, at least among the private sector, have been replaced by a public sector kind of lending into that. So in that sense, I think we are better prepared. Do I think that we're fully prepared? I don't think so. I think I hope policymakers do the right thing and do what it takes to kind of find some middle ground. No, I mean, I don't. I think you have, when you look at the polls, the majority of people in Greece want to stay in the euro area. I think when you look at the polls across Europe, that the euro area itself is much more than an economic experiment. It's a social-political experiment that goes back to 2 devastating world wars. And so there's a lot of kind of institutional and popular support for this kind of broader social experiment.
My final question to you, we've got the finance minister right behind us actually talking to investors, telling the India story. You talked about how the heavy lifting on reforms is yet to take place. What are the 3 or 4 things that you would like to get more clarity on from the Indian government? What is it that you're going to be watching out for in terms of priorities?
Right. So the Land Acquisition Act, which hasn't been reformed in decades upon decades, obviously that's a big thing that a lot of businesses are looking to help continue the CapEx growth that we have seen. I mean, the RBI cuts that we've seen to date seems to be sparking a little bit more business enthusiasm.
More cuts this year?
I think they're going to have a hard time. I think, they'll probably be on hold from here, particularly with the, depending on how the monsoon season plays out and the inflation numbers. I think it's now the ball's in the court of the government to try to start delivering on some of these reforms. So the Land Acquisition Act is important. Obviously, the GST is on the table, and the timeline is getting short there. But those are 2 big elements. I think labor reforms also are certainly an element of this reform. And those are, as I said up front, those are hard things to do, and I appreciate that those are hard things to do. But I think, to really make this spark some kind of long-lasting, sustaining growth, you need to see progress.
Well, let's see if we do see progress on those issues. It's been a pleasure speaking with you. Thanks very much for joining us here on India Business Hour. That's the JP Morgan view, sir. Be back to you.
All right, Shireen. Well, let me quickly bring all our viewers up to speed with how global markets are doing. Some very interesting takeaways from that conversation Shireen was having on global markets as well. Well, for the time being, let's take a look at Wall Street. Well, it surely seems to be cheering the FOMC's dovish comments, with the Dow gaining more than 200 points in early trade. The Nasdaq has gained more than 1%. In fact, that index has hit its lifetime high. The Nasdaq going above the levels we saw in 2000 at the height of the dot-com boom. So it's quite a historic day for U.S. markets. Let's move on across the Atlantic. Well, finance ministers from across the Eurozone are meeting in Luxembourg to discuss the way forward for Greece. The country has less than a fortnight now to reach a deal with creditors before its bailout expires. However, Europe has seen some wild gyrations in trade today. At one point in time, these markets were down more than 1% when they had opened out, but a swift recovery coming in. And, of course, so we've seen big gains across the board, especially in the German markets, which has rallied over 1%. So that's how the world is shaping up in terms of market action right now. Shireen?
Well, that's right, and we've been talking to experts on India and experts on global growth, and I caught up with Morgan Stanley's Ruchir Sharma, also the author of Breakout Nations, a short while ago, and asked him about his assessment of the Modi government's performance and, of course, the strength of the India reform story. And he was absolutely clear that incremental reforms are not going to do it for India. It is now time for the government to act and take some tough political decisions. He wasn't very sure whether the government has the political capital now to try and push a lot of the tough decisions that they ought to have taken in the first year. Of course, as he pointed out, historical data suggests that equity markets in the second year of a government, unless backed by significant reforms, see a significant correction to the tune of about 12%. We've already seen that now in India, so perhaps in the short term there could be more pain as far as our markets are concerned. And of course, Ruchir, not a big fan of the CSO's GDP data either. Let's just listen into that conversation.
The changes have been incremental, but nothing which is big bang, and that's fair in terms of the fact that maybe in India we can't see these big bang reforms. The political economy doesn't allow for that to happen. But whatever had to happen, according to me, needed to happen the first few months when the political capital was at its peak. Now the political capital is beginning to decay, and it's very difficult to get that done. And what we're seeing in the market is exactly that. There's an expectations reset which is going on, which is the fact that the hope that India could be the next economic miracle is sort of being dialed back. I'm not saying it's sort of being extinguished, it's being dialed back. So what we have now is a path where the Indian economy can grow at 6 to 7%, but not 8.5%
or 9% or 10%, which is the government's projection and
I think the government projections are completely off the mark, and even more so because
you don't buy the GDP numbers.
Yeah, I mean, I think the GDP numbers are complete nonsense, right? In terms of, I really feel that this is the most ridiculous thing that I've seen from any country in the recent past.
Is it hurting India's credibility instead of actually boosting our confidence?
Of course it is. I mean, at a time when the global economy is growing at a pace of little more than 2%, and the growth rate in emerging markets has halved from a rate of 8% at the peak last decade to less than 4% just now, and ex-China it is just 2.5%. To claim that the Indian economy is growing at 7.5%, with exports slumping, which was a big contributor to growth last decade, is absolutely ridiculous. Because where are the signs of this domestic boom? So there's something called a measured economy and something called an experienced economy. Who is experiencing the 7.5% economic growth in India? I want to know who these people are. So I think that this has been the single biggest falling of this government, which is not to have put an end to this controversy much earlier, and to have used this data to falsely claim that we are growing faster than China. Yes, China's economy is slowing down, and to compare with China is anyway misleading. But to sort of go ahead with this data, to me, has been the single biggest pitfall of this government.
I want to address the China issue, because I remember you wrote that China slowing down shouldn't be seen as a victory for Narendra Modi's government.
Right.
And you're absolutely right. It is misleading to do this India-China comparison, because, you've written about how China's economic miracle has already happened, and we're still aspiring, to create an economic miracle for ourselves. How do you see now the India-China context? There's a lot of talk about Modi's visit to China and how expectations on the India-China front have been reset. Do you really believe that?
As you know, I really feel that these groupings are just, great marketing exercises with absolutely no fundamental value. So comparing India and China is cool because these are two large economies based in Asia. But there's nothing in common between them, even in terms of size. I mean, the Chinese economy is multiple size India's economy. India today is where China was about 20 years ago or so. So these comparisons are completely misleading, according to me. But having said that, I think that yeah, sure, we can aspire to be like China and try and grow as fast as China did, but then we have to sort of understand what exactly China did. They took some pretty big risks with economic reforms. Every few years, they took some very big risks, and those risks paid off. If you're not willing to take those risks, we should aspire to be that. Instead, the attitude in India often tends to be, where else will the money go? It's got to come to India. This is the best story in the world. And you hear these cliches and these banal statements.
And it's no longer the best story in the world?
No, I'm saying that,
I mean, even the folks at Morgan Stanley back in India say that India is the only game in town, but you don't buy that?
No, I think that's very dangerous analysis, according to me, because that leads to complacency. That sort of makes it believe that where else will the money go? It's got to come here. This is the only place where it will go. These dynamics shift very quickly, and we're also like in an environment, let's not forget, where the overall environment for emerging markets is not that conducive. The overall flows to emerging markets haven't been that strong, and this is not what the case was last decade. Once again, we tend to have, I think, a very insular analysis of what's happening just in India, not realizing that we are operating in a global world out here, in a very globalized world out there. I mean, the last decade's boom was a lot to do with the global emerging market boom. Even if you look at the stock market, around half the earnings of the stock market really come from external sources. So, we try and sort of project how much the stock market earnings will be or growth will be based on what the domestic economy is doing. But there's also like an external economy. That external economy affects both our growth rate and also half the earnings of the stock market. And I think that's something which is forgotten in this entire analysis, which is very insular only about India.
Well, that's Morgan Stanley's Ruchir Sharma saying that there is no room for complacency. The government must push ahead with its reform agenda. Well, speaking of those GDP numbers, that was a question that was asked of the finance minister as well. And here's the finance minister defending the credibility of the CSO's data.
And I must say the past of the CSO in India, the Central Statistical Organization, has been an extremely credible one. They've made public the basis on which they've arrived at this data. And nobody has been able to question the basis. In fact, the cynicism with regard to the Indian economy was so large, which had been built up over the last 4 or 5 years, that there was a sense of surprise that we are doing well. And therefore, it took time for some people to digest the fact that we are standing out in the area of global slowdown itself. But I don't see any issue as far as the figures are concerned.
Well, that was the finance minister speaking to foreign institutional investors at the Citi Global Investor Meet. In fact, he continues to be holding meetings with foreign institutional investors. Right behind me, in fact, you can see the finance minister in talks with some FIIs. There was a closed-door meeting that has just concluded. The likes of D, Shaw, Soros, BlackRock, etc. I'm being given to understand were part of that meeting. Has he been able to sell the India story or not? That's the big question.